if you're a foreign business, an international business without any presence in the state, in the U.S., we've helped hundreds, if not maybe thousands of them, understand what it's going to require and what you're going to need in order to get compliant in the state and to get set up and registered and become a compliant taxpayer in each of the states.
Hello, you are listening to the SALTcast by Pisen Johnson, the sales tax people. And for the last 30 plus years, we have been providing sales tax solutions and peace of mind to everyone we talk to. Sales tax compliance in the United States can be pretty complicated. But if you understand where you have nexus and you know the taxability of your products and your services, and you know how the method of how you conduct your business affects your sales tax responsibilities, if you have all of these things understood, you have a good idea of how to go forward with your sales tax compliance. But when it comes to being a non-U.S. business, not only do you have to deal with and know those three things I just mentioned, but there are some very unique challenges that you may not even be aware of. So on today's episode of the SALTcast, we talk about just that.
Carson, is they struggle for foreign sellers to get registered in the state. And they struggle getting registered in the state because they don't have the information to efficiently and effectively register. So as a foreign seller, the registration process is a little bit different because they don't have a social security number and they don't have, or a driver's license. And so they oftentimes have to provide something else in lieu of that information. And so that's what we work with the foreign sellers on, is on the registration side, but it doesn't have to do with compliance per se, but it does open up that door to compliance because you have to be registered in order to file returns, so on and so forth. You know what I mean?
Could you, as a foreign business, could you get away without registering? Like, if you meet the nexus thresholds, can you get away with it? Like, what could a state actually do? Really?
Are you saying business? Even if, anyone can get away with it as long as they don't get audited, right?
Right.
But yeah, once an audit comes, that's a great question of like, what recourse do the states have, right, to go after an international business?
Right. Like, how would a state even find this international business?
One example with that is, a real life example, you could say, that we dealt with a business that came to us, and it was the state of Texas. Texas actually was able to see somehow, some way that this business was selling on Amazon. And they, in fact, had the comptroller contacted Amazon, and it went all the way to their legal department at Amazon, and to the point where they said, you have a client, one of your sellers is, illegal, you could say, essentially. Like, their business is not operating under the law and under the statutes. And Amazon, in fact, froze their account and their funds until they went and cleaned up the situation with Texas, and they had to prove then to Amazon that it was all cleaned up, and it was a mess. Like, it was a big enough store to where by the time I think it took like 3 to 4 months, because you're dealing with, you got the comptroller, right, and you got to work through everything there, make sure you get it all cleaned up. There are, of course, a bunch of penalties and interest on delinquent tax. And then they had to go through the, rigmarole, you could say, of getting it cleaned up with Amazon to say, yeah, here's my proof that, I took care of this. And they had, I think there was close to 400,000 or so that they had tied
geez.
up, almost 500,000, because at that point Amazon froze all of their funds. It wasn't just about Texas sales at that point. Like all of their revenue from Amazon was held up and locked up until they cleaned up that situation. So one example of how, what the states could do.
I think the other thing
Sheesh.
that they do is because when you register or when you get set up in that state as a taxpayer, they also get your bank account information. And we've seen where the states have gone after the individual's bank account. For a foreign seller, though, sometimes they don't have a U.S. bank account, and they have, and so they can't make payments to the state. But if you do have a U.S. bank account, then it does freeze that account, or they can freeze that account, and we've seen that happen. The other thing that we've seen is from a supplier's perspective, the state will go after your supplier and shut down how you get goods. So if you have a U.S. supplier or a supplier, in that particular state or a nearby state or whatever, then we will also seen where they've gone after the individual suppliers for the companies.
Yeah, and you bring up a point as far as what international sellers can expect around compliance. You brought up the U.S. bank account. That is one of the hurdles or roadblocks that international companies run into when it comes to compliance, right? Because the states want payments from U.S. bank accounts. So, that's something where the Payoneer and all these other kind of exchanges or solutions or services that international sellers can use as far as funds going from your PayPal or Amazon or whatever, Shopify even, and then you getting those funds and vice versa. That may be a way that you can pay suppliers, vendors, whatnot in the US. Unfortunately, with few if any exceptions that I'm aware of, those do not work. So you do really need a U.S. bank account. So you got to go through the cost and burden of setting up a U.S. bank account. Or we do have a solution for that with our international clients, where we're able to get a wire transfer from them each month with those tax funds. And then as we file those returns, of course, we're the ones making the payments. Sometimes from like an escrow account. There's different options there. But bottom line being, we can take that wire transfer and then get those tax payments made to the states. But there are solutions, right? But again, we're talking about some of the roadblocks or issues that you'd have as an international seller, and that's certainly one to consider and one that you'll have to deal with.
Yeah, but then from that, at first it seems like you got to worry about nexus taxability. And just the method you're using to do business in the U.S. But then, I think that's good to talk about kind of the roadblocks, because that's some things I don't often see that people are covering. It's like, here's the roadblocks and here's a solution.
Yeah,
but
regardless of the seller or the business, whether you're in the state or you're a foreign seller. Nexus definitely is the starting point. You have to trigger Nexus, and we talk about that all day, every day. It seems like every podcast we talk about. You start with Nexus. That's step number one. Have I established Nexus? And it's not necessarily where you're physically located, but it's also where your customers are located. So you got to establish Nexus before any state can impose that you collect their tax. So.
I did have another question. This kind of goes, I guess it's kind of a nexus question, but do foreign businesses have to set up like an LLC or a corporation within the states? Is that a requirement?
Not within the state, no. They don't have to register with the Secretary of State more times than not. You do have to set up the entity and get a federal ID number with the Internal Revenue Service, but you don't have to incorporate or get a qualification in the state in order to open up a sales tax account. You would if you had, from a potentially from a franchise or from an income tax perspective, arguably you would, but we've seen many clients and even many businesses get away with not registering with the Secretary of State to be a through a foreign qualification. So
in what circumstances then would a foreign business set up like an LLC? You see it popular like in Delaware, where there's no corporate taxes.
so you have to have an entity and be registered with the Internal Revenue Service, the IRS, and so companies will set up something somewhere, but you don't have to do it in every state. So let's say that they do set up the entity in Delaware as an LLC. You don't have to. I mean, you could certainly be a foreign company in Poland, and then you just go to the IRS and you get a federal ID number for your Poland entity in Poland. So it doesn't have to be in Delaware or in any U.S. state for that matter. You just have to have a federal ID number. You have to have that with the Internal Revenue Service.
So a couple circumstances where someone would want to actually incorporate in the U.S., right? And like you said, Ryan, actually set up some sort of LLC or whatnot in any state, Wyoming, Delaware, wherever someone might want to set it up, would be if they wanted to obtain a U.S. bank account, right? You would need to do that in that case. Additionally, some suppliers, right, some vendors would require that to do business with them. They would actually require that you set up a U.S. entity, to even be one of their clients, right, and partner with them. So there, oftentimes, right, there are scenarios like that where you're required to do certain things as a business, more so based on partnerships that you're trying to set up rather than any governmental entities that have statutes or laws that would require you to do so. And that's a case, of course,
I would agree with that.
Where it's similar even on the sales tax side with sometimes with exemptions, right? If you're a business and you're a drop shipper, or you have a drop shipping business, there are the laws and statutes in the states, and there are the ways that they require or even ask you to manage sales tax around exemption or any type of exemption certificate, resale certificate. However, if you're relying on vendors that you're placing orders with them and they're drop shipping to your customers, oftentimes you're at the mercy of that vendor and how they do things. There's a process we just went through with a client of ours that was pretty painful, mainly because the vendor had a combination of getting some bad advice, and also they knew what they knew, but they also didn't know what they didn't know, and they created a whole process around that to say, this is what we require for you to do business with us. If you don't do this, and this, which was like a state by state thing, we're going to charge you tax. And it turned out they ended up charging tens of thousands of dollars of tax to this seller, and there's some implications there that this vendor wasn't aware of. Like, if you're charging tax to them and you're not supposed to, like, there's just issues to consider, both with your relationship with your between the vendor and their customers, but also just even issues they could run into with the state if the worst case scenario happens, and that is if you come under audit. So we were able to go through some of that with the vendor and their finance team, you could say their accounting team, and shed some light on that to where they actually made some changes and said, oh yeah, we'll accept these, for example, like multi-jurisdiction certificates and whatnot. We just had to really go through there and educate them. And so again, with all that said, back to the point, something to be aware of, that when you're dealing with sales tax throughout the states, sometimes you're going to need to make adjustments or set up things a certain way just based on your relationships.
That's a good point. Well, I know
Kind
you
of a
guys.
random tangent, but there you go.
It's super true though, and it's applicable. I mean, you see businesses that, hey, I got a vendor who needs this. I got Amazon who's asking for this, and how do I get that? And hey, I have this. My bank is wanting this. Wow. Okay. Well, yeah. Here's how we'll do that, or here's what you'll need to do here. So, yeah, a lot of it does have to do with those relationships and those partnerships, those that you're doing business with.
So what I'm hearing is, if you're an international business, there are some roadblocks that you got to be aware of. Beyond nexus, taxability, the method that you're doing business in the US. But, we have quite a few international clients that we've really been able to figure it out and get everything that they might need and help them come up with the best solution for themselves, is what I'm hearing.
Yeah, for sure, for sure. If you're a foreign business, an international business, without any presence in the state, in the U.S., yeah, we've helped hundreds, if not maybe thousands of them, understand what it's going to require and what you're going to need in order to get compliant in the state and to get set up and registered and become a compliant taxpayer in each of the states.
We're their liaison.
Yeah.
To the
Yeah,
states.
not as always with any business, we're going to lay out, the options, the laws, the statutes, what do the states require, but we're also going to discuss a practical approach for the business, right? There's always, we say it time and time again, like find where a practical approach for your business intersects with compliance. And it's always worth considering what are the costs of compliance, all the administrative burden, everything that's associated with that. So that's certainly going to be a key part of that discussion.
Yeah.
Well, guys, thank you so much for jumping on with me. As always, it was a great discussion, and we'll see you guys next time.
Thanks, Ryan.
Bye-bye.